China, the world's second biggest economy and our BRICS partner, but its economy has struggled to shake off the dire impact of the COVID-19 pandemic. Now, there are rising concerns around the slowing imports and exports in that country, and at the same time, China's property sector has been in a crisis since 2021, with Everground at the center of those issues. In the latest developments around this, staff members from Everground's wealth management unit have been detained by police in Shenzhen, south of China. This on the back of the company meeting its demise after defaulting on a debt of over 5.5 billion rand. Joining me for more on this is Chunying. She's a correspondent from CGTN, or China Global Television Network. A very good morning to you from South Africa. So let's start with the economy and that it's waning. You know, China's inflation fell to about 0.3% year on year in July, and that's registered a deflation for the first time in more than 2 years. What are those challenges that are facing the economy at the moment?
Well, first of all, I have to say that I don't agree with you on the hype about China's deflation pressure, because if you look at the most recent data released a week ago, the CPI, which is the main gauge of inflation, returned to growth from a decline in August. Well, the PPI, which measures costs for goods at the factory gate, narrowed its decrease compared with July, and that indicated a stabilization and recovery in the overall price level in China. And by the way, China's total trade also beat expectations to sustain an upward trajectory in August as well, as the country's foreign trade structure continued to improve with a competitive edge. There are reasons for us to, as I said, to remain positive about China's economic outlook. But as you just mentioned, there are still challenges ahead, including, most importantly, its insufficient demand, which initially triggered by a series of negative shocks, including public health and global economic uncertainties. So the market faces a situation of decreasing goods and services prices, as well as low labor wages. And in that situation, it is quite crucial to improve market expectations and implement more strong policies to boost its market confidence.
And key to those policies is the government's role to implement those policies and some of the measures that they're taking to mitigate the challenges that you've just mentioned. We had a drop in the key lending rate in the previous meeting of the central bank, and then the latest announcement now that it will remain unchanged. And some market participants and analysts globally are still saying government needs to push a little bit more to stimulate the world's second biggest economy. Do you think that enough has been done to mitigate these challenges?
Well, I think a lot of policies are on the government's agenda. For example, Chinese authorities on Monday issued 20 measures to boost domestic consumption because, as I just said, the insufficient domestic demand is one of the major challenges facing China's current economic outlook. Including support for expanding real estate and auto sales. Also in terms of houses, specifically, the country vowed to improve the basic mechanisms and support policies for housing security, expand the supply of affordable rental housing, and focus on addressing the housing problems of new urban residents, young people, and other groups with housing difficulties. And the country also called for the full implementation of favorable measures, including lower down payment requirements and mortgage rates for first-time home buyers, tax breaks for upgrading and trading buyers who have paid off prior mortgages as first-time purchases. And another key driver of domestic consumption is auto sales, which account for nearly 10% of total consumption. So the country on Monday also said that all regions are now barred from imposing new restrictive measures on car purchases, and places that already have restrictions in place should optimize car purchases restrictions according to their conditions. And also efforts should be made to fully implement policies aimed at removing restrictions on sales of second-hands as well. So yes, a lot of policies on the agenda to boost consumption. Yes.
And then finally, and briefly, if you could, the situation with the property sector, Evergrande, and other big property companies embattled in debt and really struggling. There are headways in terms of those being detained by police who are suspected to have been involved in the demise of the likes of Evergrande. Give us an update on what's happening there, but also the measures that are being taken to get these big property companies out of the debt burden that they find themselves in.
Oh, thanks for your question. We know that the shares in that Chinese property giant Everground plunged by around 25% as markets opened in Hong Kong on Monday. And earlier last month, the group filed for a bankruptcy protection in the United States. It's not news that the top real estate developer in China has been experiencing capital and funding problems since 2 years ago. It defaulted on its more than $300 billion in debt in 2021 and unveiled a proposal for its debt restructuring earlier this year. And in July, Evergrande reported a net loss of more than $113 billion in 2021 and 2022. And many investors have been seriously worrying about possible potential impact on the industry and the financial sector. But China's central bank said that the single case will not impact regular middle or long-term financing in the market. And Evergrande's risk was mainly caused by poor management and overexpansion. And the short-term risk of an individual developer will not impact the middle to long-term financing in the market.